Let's get rolling. Everybody, welcome. My name is Tony Saramatis with Truly Wow. We are ARA's marketing and communications partner, and I'd like to officially welcome you to ARA's continuing education webinar series for March. And we're thankful that you're here and not watching basketball. So the goal is for you guys to walk away with some actionable ideas to help your business. So before we get started, a couple of real quick housekeeping items. First off, we've got everyone on mute, or at least everybody should be on mute, just to try to keep the background noise to a minimum. With bigger groups, things can get a little unruly. But we encourage you to ask questions. We've set aside about 20 minutes or so at the tail end for Q&A. So if you want to ask a question, please type it in the chat box or use the Q&A button. We're going to queue them up and then address them in the order in which they come in during the Q&A session at the tail end. So I'd like to introduce our guests. You're probably familiar with Mike Peplinski with Harding Brooks Insurance, and alongside Mike is his counterpart, Jon Pollard with Harding Brooks. Gentlemen, welcome and thanks for taking the time today. Really appreciate you being here.
Thank you, Tony. Appreciate it.
You got it.
About a month or so ago, Marcus Potter kind of gave me a call and said, "Hey, we want to do a webinar on some topics that I feel a lot of people are missing the boat on or not understanding, or really just don't know about from a business perspective to kind of help protect their business. Because you guys, let's face it, are dealing with a lot of stress in terms of attorneys, lawsuits coming at you from every different angle. So, you know, as we always do, we always love working with the ARA and all their members. So, of course, we jumped at the opportunity to work with you guys. As we always say, one of the favorite things that I enjoy doing and our team at Harding Brooks enjoys doing is to really just educate this industry about your risks, about your exposures that are just constantly coming at you. Insurance is everyone's favorite thing to hate, the necessary evil. I have countless conversations on a daily basis that they all tell me how much they like me and hate what I'm doing, which is the insurance aspect. But we are a firm believer in the phrase, knowledge is power. And that's what we love to do. We love to educate you so you have the knowledge, you have the tools, you have the skill set to properly make business decisions to protect your company. Today we're going to be kind of covering a wide range of topics that really all focus on your biggest challenge, which is your employees. What I want to do is really just help you better understand on how to utilize insurance to protect and strengthen your business. There's certain strategies as a company that you really need to utilize to differentiate yourself from your peers while recruiting and retaining your employees, as well as protecting your business from your employees and safeguarding them. Today we're going to kind of get into 4 areas, kind of give you a little bit of a snapshot basis on really the knowledge of it. The areas we're going to touch on is employment practices liability coverage. Really, what is it? How does it protect you and why you should be using it or have it? Life insurance, but specifically geared towards group term life insurance and then key man life insurance, 2 areas that a lot of people aren't aware of or don't have the knowledge of. And then ending with the great debate on misclassifying your employees 1099 or W-2 employees with the workers' compensation coverage. And then we'll end it, as Tony said, with probably 10, 20 minutes or whatever time we have to touch on some questions. So kind of jumping right into it. Starting off with employment practices liability coverage. This is one of the fastest growing claims that we see over the last 10 years for multiple different reasons. What is employment practice coverage? What is it important to you? Who needs it? What's the ramifications of not having it in your company? Well, employment practice liability coverage otherwise known as EPLI coverage, provides financial protection against your employment-related claims arising from your employees. So the big things are your age discrimination, your retaliation, harassment, wrongful termination, disability discrimination, other similar acts that your employees are turning around and bringing them against you. Um, Everybody has a great group of employees. Everything is fantastic until it's not. And just like the debtors out there, just like everybody's out there, they're trained to sue when something goes wrong. That's what everybody's trained to do. Um, so that kind of covers all the employment related issues that you deal with. The liability insurance that you typically get with your general liability and all that other stuff has nothing to do with the employment issues that we just kind of discussed. The biggest one, honestly, is harassment, whether it's sexual harassment or harassment in general of how they kind of categorize things. But it's one of those that most of the issue comes down to defense costs. Whether it's true, fraudulent, you name it, you have to defend it. You can't just tell someone, obviously, you can't sue me because you're wrong and you're making this up. So really, who needs this kind of coverage? Well, every single organization out there with employees, regardless of size, regardless of industry, needs this coverage. Pardon Bricks, we have our coverage. Every single person, no matter what industry you are in, needs this type of coverage. It not only covers your directors, officers, your full-time, your part-time, your seasonal workers, but it also often covers your volunteers, independent contractors, third parties, and many other individuals that all your other policies do not include. Even companies that haven't even yet hired an employee should have this type of coverage, because you're at risk of employment practice lawsuits from people coming around. And yes, they are some professional fraudulent claim guys out there. They'll come around and just throw lawsuits on you from denying employment due to discrimination based on age, sex, and other factors in there. So bottom line, who needs it is everybody. It does based on really truly size of your business in terms of the type of rate you get. Obviously, the larger player you are, the larger premium it comes with, as well as the state you're based out of. Texas, California, Florida are the three highest states in terms of seeing these claims come through, which is normal because they're three of the highest populated states in the country. But really, the big question that we want to talk about is, how do you safeguard yourself, and really what risk are you under if you do not have this type of coverage? So, why do you need this? What type of risk are you under? The role of this coverage is to serve as a financial safeguard against all these unexpected workplace exposures. You'll hear me say a few times today, your employees are what makes your company great, and it's also your biggest exposure, right? They're who you are. They're out there on the streets. They're making you guys, building your brand, and they also can completely crush it with one false swoop. Most owners, have this line, well, it's never going to happen to me, right? Think again. It's only a matter of time. You can do everything perfect, as you all know, and it's going to come for you. EPLI claims impact organizations of every size and every industry, as we talked about. And not only they're going to disrupt your business, they're going to hurt your employee morale. A big one to me is damaging your reputation, that brand that you killed yourself to build, and then ultimately cost businesses financially before even getting to the courts, right? Financially, they come in and they are very, very expensive type of claims. Companies of all sizes, about 40% of all EPLI claims are filed against small businesses ranging from 15 to 100 employees. Almost half of them are in small business, which makes up majority of our industry. So kind of throwing some numbers at you. For cases that settle, right, don't go to court, but settle, judgments usually range around $75,000 with cost of defenses north of $100,000. For those that are not dismissed, usually a jury award average size is around $250,000. Most any jury is going to side with the employee, not the employer, just the way it is. So what it comes down to is all defense costs and covering yourself with the proper coverage. And that's, these type of things range from, on average size, probably $3,000 to $5,000. Certain states, certain sizes clearly are much higher based on your, what state you reside in, and as well as the number of employees you have. But overall, this is a key part of your business that you need to kind of cover yourself. I had somebody literally this week call me and said, "Hey, did I purchase that employment practices coverage that you talked about?" I'm like, I don't remember off the top of my head, but let's pull it up. And the answer was no. And I said, "You did not." He's like, "Yeah, I didn't think I did." And he goes, "I got a claim right now with a former employee coming back suing me, and right or wrong, he's got to now go hire an attorney and defend himself." We've had a couple just in this industry alone where the owner fired the driver for letting their boyfriend, girlfriend in the car and kind of hanging out. And then they thought it was a good idea to show them the ropes and teach them how to be a repo driver, and they allowed them to take the wheel. And that person got in a car accident. So they terminated them, and for really poor judgment, as anybody would. And all of a sudden they got a lawsuit saying, "I told you about this. You said it was fine." A lot of lies, right? But what do you have to do now is you have to defend yourself, and that's thousands and thousands of dollars defending yourself against frivolous lawsuits, to be honest with you. So overall, who needs this? Everybody needs this, regardless of size. And from the coverage standpoint, any one of these claims typically on average are going to end up being six figures or more. Yes, there's some that I've heard of that's 25, 30,000 down there, but those are the few and far between. Most of these type of claims are ranging from six figures and up. So this is something that if you do not have it, look into it, cover yourself. You guys have worked very hard to build your businesses. You don't want one employee to be able to kind of come in and swoop in and kind of take that away from you. Transitioning, we're going to flip it over to John, who's going to kind of get into some life insurance topics. And again, all the questions, guys, you can type them into the question box or have them at the end.
All right, guys, thanks for having me. Just to piggyback off of what Mike was talking about, where EPLI helps to protect your business, you can also have some policies in place that help protect, your employees, who ultimately are your guys' biggest assets. They've helped, grow the business. They've helped you get to the level that you're at, and to have some policies in place that can really benefit them can, definitely have a lasting effect. So group term life insurance. It's simply that. It's term life based off of your group, your employment group, and you do it as an employee group as a whole. It is employer paid, which means you guys are paying it as the employers, and every employee is included in that group. You can't pick and choose. It is a guaranteed no health exam issuance up to $100,000, which can be great for some demographics of older, where they might not be able to get life insurance because of their age or as easily. This can be a great option for them. To give you an idea, roughly a $50,000 policy average costs you about $10 per month per employee. So very inexpensive, a great way to help cover your employees. It only applies while that employee is employed with you, with your company. As far as you paying for it, they do have the little caveat of if they did leave, they are able to take it with them, convert it into their own life insurance policy. So it's something they can continue on. The employee will name their beneficiaries. The actual life insurance benefit goes directly to them, which is, obviously in a time of need would be a great benefit for their family, for, their loved ones to help with those afterlife expense. Really, it's the nice thing is that because it is a guaranteed offer with every employee, your group rates are based off of your employee group as a whole. So if you do have a lot of younger employees, your rates can be significantly lower based off of, you know, the age of those employees. You know, big reason, why should you offer it? Like I said in the beginning, it's to help these employees that really are your biggest assets. And I know, you know, retaining employees, getting new employees to come to your business, it's a huge hot topic. It's hard to get employees. It's hard to get good drivers. It's hard to retain good drivers. This could be a really great starting, you know, part of a benefit package that you could have for your employees. You know, you put together to attract and retain reliable employees. Most employees, let's be honest, they don't have their own life insurance. You know, studies have found that basically 65 to 70% of working adults rely on life insurance through their employer. They're not going out and getting it themselves, whether for a cost, you know, part, or just the time it takes to get it and to apply for it. So this is something that you can really show them, to offer them, and it really could be a great benefit to them and their families. Many companies that I've set up so far, like I said, you can do certain tiers. They allow up to 2 tiers, which is a nice benefit because you can have your regular driver, office employee tier, and most companies have set that up at $50,000. But then you can also have that second tier where you can offer up to 100,000 without any additional medical exams. So you can have your, you know, key employees, your managers, even you as owners can be a part of this. So you can go up to 100,000 life insurance guaranteed on that as well. So most companies have set up 2-tier limits, but you don't have to. You can have it set at 1 as well. But again, it is a employer paid, so it is a cost that you would take on. But because those employees, they are your biggest asset, you have invested so much in them. This is probably something that, you know, the cost wise, it's a great investment to keep them on. And to kind of switch gears to the key employee life insurance, big difference there is it is still employer paid. It's a policy that is put in place for exactly that, your key employees. So where the difference is on the group term life, the member has a beneficiary of their spouse or whomever. In the key employee, the beneficiary is you as the employer, the one paying that actual premium. The biggest thing with this is it's going to help protect your business. If you have that employee that you just know dealing without having them would put your business at a huge disadvantage. Training someone to get someone up to speed of that employee would take a long time. Business would suffer from it. So employers can put this in place for those key, you know, employees that really do have that lasting effect on your business. They are, you know, whether it's a business partner, just a top tier, you know, office manager, driving manager, whomever that may be, you know, if your business really can't sustain without them, this is something really to look into to help protect you guys as a whole. To kind of flip on to the next part where these can all really benefit, you know, your company. Here's some other things that you can do to help strengthen that benefit package that you can offer employees coming in. These ancillary products such as group dental, group vision policies. You know, traditional health insurance, which we're not really going to talk about right now, a lot of them have stopped carrying dental in it or vision in it. You have to get those separately. The nice thing is that you can offer all of these policies without having a true health, you know, package in place. These can all just be added to the side, on the side of it. And the nice thing is that the carrier that offers your group life, at least that we use, they also offer the group dental and vision policies. So with those, you can get multiple lines of discounts, having multiple lines of coverage with them. You know, the real big part with the group dental, you can kind of tailor it to how you want. There's different levels, obviously, we can all, you know, always take a look at, but the nice thing is you can choose to pay for it as the employer, but it doesn't have to be. You can choose employee paid. You can choose that employers pay a certain percentage. That's totally, you know, you can structure it however you want. Whereas group life, every employee is included. You don't have to include every employee. If they have it elsewhere, they don't have to have it. If you choose to pay for everybody, then they can be a part of that. But if you aren't choosing to pay for it, then those employees that want to take advantage of it, it's a nice, less costly way for them to get coverages like this because it is done as a group rate. And they also have, single just employee only plans, and they also have employee plus spouse and employee plus family, just like any other health insurance policy would. But these are great, tools and packages you could put together to make that enticing, benefits package for those employees that work so hard to get and to train and to keep. And having stuff like this in place can really help protect them just as much as they help protect you. So I'm going to hand it back over to Mike. I appreciate your time.
Lastly is the hot topic that I love talking about. I enjoy touching on these type of topics because I know it's a key factor in many of you guys and how you guys operate. Really independent contractors versus employees. 1099 versus W-2 employees is a very risky, misclassified piece that I feel like our industry, many industries, I should say, but our industry included, is just not doing a good job overall. Many people are doing a great job, and many people I feel probably need to relook at some things. The question today that I'm hopefully here to help answer, touch on is how do you classify your employees, and if you misclassify them, are you leaving yourself at a big risk? Within the repossession industry, we're ready for this. There are many companies that classify their employees as 1099 subcontractors, thinking they're saving money and helping themselves out, but completely leaving themselves open to risks that could be crippling to them in the long run. Within this industry, we find that the guidelines to distinguish a 1099 employee are rarely met. Honestly, the few instances that the guidelines are met to classify, subcontractors would need to have their own coverage, which I have yet to see ones actually have. Before getting into really the risks of misclassifying, I kind of want to just go over how to classify and really the criteria that it is. So there's a bunch of different ways to distinguish the two types of employees. And I'm going to kind of touch on these four because these are, in my ways, and my thoughts are the four biggest reasons how to classify. For one, control. As a 1099, the contractor has complete control over how the work's performed, where the work's performed, the hours in which the work is performed. And honestly, the only thing that they must ensure is just the final result, right? The final result, everything leading up to that final result, they have complete control over. As a W-2 employee, the employer, the hiring employer, has complete control over how the work's done, where it's done, when it's performed, and you control that aspect. From a supervision side, again, 1099s, there is no supervision. The work is reviewed only when the assignment, the project is completed. No one's reviewing the step-by-step, seeing how they're doing. Whereas a W-2 employee, you better believe they're closely supervised, right? Every step they make, you are watching them. The third one is pay. Well, a 1099 is really paid by the assignment. Really, a lot of people get some money up front, and then the remaining payment is given when the task is completed. Versus a W-2, it's a predetermined day, whether it's a weekly, bi-weekly, monthly, that they're getting paid. That they're going to receive a check on X day every single month, predetermined. Where again, 1099 is once the task is done, then you get paid. And then termination, the fourth section is 1099 and employer must both agree to end the relationship based on the written agreement they have in place. Whereas a W-2, you can be terminated, resign, quit without cause or notice at any time. So you can see very clearly the distinction between the 1099 and W-2. You take it a step farther, the great state of California incorporated the ABC test. The ABC test is what the California Labor Code uses to determine whether a worker is covered by the state wages and unemployment or can be an independent contractor. Under this test, a worker may be classified as an independent contractor if he or she meets all of the following, right? So in California, we all know they kind of set the precedent for many people, right? You must meet all three of these to be considered an independent contractor. So letter A, operates without control or guidance from the hiring company. Basically, the hiring company has no say in how the work is performed. They just see the end result. Okay. B, performs services unrelated to the hiring company's core business. So what's that mean? Well, the work the work outside the usual course of hiring. So in their business, we'll talk about our repossession business. Anything that's outside of the normal aspects and scopes of your business, if you need to get something done, you would hire somebody out. You wouldn't hire someone as an independent contractor to perform the normal day-to-day operations of your business. And then C, excuse me, works independently in an established business that exists separately from the hiring business. So basically they have an additional business outside, or their business outside, that they're making money on, and they were just hired on the side from you for one piece. And again, all three of those things need to be met to be considered an independent contractor for California. Many states right now are in discussions with, honestly, with putting more of this in play, because more of this is coming out in every single state. More lawsuits are coming, more issues are arising. So they're trying to do a better job of really being specific on who is and who isn't. And most of the cases are, you are not going to be an independent contractor in many cases, as you see. Now we get to the question, really, why is it important to classify your employees correctly, right? What is really the risk? Well, for starters, most employees, most workers are under the impression that they have the same rights and eligible benefits that go along with being an employee, such as if they get hurt while on the job, they're going to anticipate and expect coverage to be afforded to them. Overtime pay, many lawsuits in this area come from overtime pay. And then unemployment benefits, if they were to get terminated by you. If you said, you know what, you're out, they would expect unemployment benefits to come. As an independent contractor, you do not have that. And this whole section, as hot of a topic as I feel it is in our industry, is not to point fingers at anybody, but just to educate so everybody understands the ramifications of where you are and what you're doing. You know, there's a strong misconception out there that classifying your employees as 1099s would be beneficial to you solely to save money, avoiding payroll taxes, freeing yourself from some of the liability that they may cause as a driver or an employee. And quite honestly, whether you're classified improperly or not, you have that exposure. It's just, hey, am I going to have coverage on it, or am I not going to have coverage on it? The biggest concern to me in misclassification is really getting sued by your independent contractor for injuries being sustained while on the job. Instead of having a workers' comp coverage to handle all the situations, right? You're now going to be stuck in the middle of a big lawsuit, probably having to pay out of your pocket for their injuries, paying thousands of dollars in attorney fees. You know, if your independent contractor is discovered to be the legal definition of an employee, which will come out, trust me, it always does come out during their lawsuit, and you'll almost always likely be required to reimburse them for all their wages that you should have paid them under the Fair Labor Standards Act, any overtime included, like that's a big one, right? And unfortunately, whatever they say, you typically are stroking a check, just because kind of that's how our society is at the moment. You know, paying back taxes, penalties for federal and state income taxes, your Social Security, your Medicare, your unemployment, and then of course all the misclassified injured employees' workers' compensation benefits. The end result is thousands and thousands and thousands of dollars to you, because up front, you know, someone told you, hey, if you do this, you may save $1 or $2 in the right off the get-go. And yes, that is true. But at the end result, at the end of the day, you're in this for the long haul, right? You're not in this for 2 days. You're not in this for a week or a month. You're in this to sustain a long-standing business, a thriving business, and therefore you need to be properly protected for those incidents. You know, the definition of insurance to me is pretty simple. It's just a transfer of risk to somebody else. That's all insurance is, right? no one enjoys insurance because it's kind of a pain. It's a necessary evil, as I said, but the definition is you're taking your risk and you're handing it off to somebody else for a fee. To properly safeguard your business that you've built, for many of you guys could be second generation here. You need to have your exposures properly covered. Your biggest exposure, as we talked about, is your employees. Without them covered, you're just a moment away from having everything you built gone. And that to me is the biggest issue. I do want to go back really quick to this slide. I want everybody to take a second and really just kind of ask yourselves on these 4 questions: control, supervision, pay. If you are 1099, can you answer those and honestly say that that's you, right? Are they a W-2 or are they truly a 1099 from the exposure based off of that? In my mind, I haven't seen anyone that truly would be classified as a 1099 in our industry based on these definitions and based on how the states, specifically California, is guiding them and writing them, right? And how the precedent has been set to force everybody to have W-2 employees to protect yourself and to protect the workers. With that, I'm going to open it up with some questions and ask away. We kind of had a lot of 4 very random topics, right? All geared towards protecting your employees, protecting yourself from your employees, and how to retain the good ones. So yes, a little bit random, but they all kind of jive together at the end of the day. And it kind of goes back to your employees of retaining and keeping them, but also safeguarding yourself from them that, they can also completely cripple your business if gone wrong.
Well, everyone, if you've got a question, type it in the chat. Mike, I've got a question for you. So I'm a repossession agency owner, and I'm trying to think about employee benefits as strategically. How big of an opportunity is there for repossession agencies to set themselves apart from their competitors with a well-structured insurance strategy?
Well, I'll be honest. When I first started working in this industry, 15 plus years ago, I was actually blown away that most companies had no benefits package at all.
Mm-hmm.
And that was just really leaving your employees, completely out to dry, jump and chip left and right for a penny here, penny there. I would say we've taken some big strides. I feel like a lot more companies now have some sort of benefit structure, but I would still tell you there's more that do not than do, right? So if you do have some sort of benefit package that you can offer your employees coming on or offer to those that are with you to retain them, that gives you a leg up on most people because there's more that do not than do.
Yeah.
So it's a huge advantage, a huge piece, and it's also a peace of mind to yourself that you're taking care of the people that are really taking care of you and growing your brand.
Okay. Well, it doesn't look like we've got any other questions queued up. I did have one other question specifically about the 1099 versus W-2. On the slide that has the 1099 and W-2 side by side. That one, yep. So as far as pay goes, so let's say that you've got a project that needs to be done that isn't necessarily related to the day-to-day operations of the business, but the way that the contract is structured is hourly and not for the entire assignment. Now that this if this is outside of your scope, this turns into legal advice, then obviously we don't want to do that. But I'm just curious, like in your experience, have you seen that there's any leeway at all about how a contractor, how contract work can be structured, or how the contract is structured with 1099 workers versus, um, so that it's not blurring the lines between
So
1099 and W-2.
I'll answer it this way. So that's definitely more of a legal question.
Yeah.
I do think I'm pretty smart, but I am not an attorney at all. But I would tell you, every state's very different in how they look at things, and it's
Mhm.
very, it is much the same but slightly different per state. But that that would definitely be more of a attorney question on that.
Okay. All right. So the takeaway is check with your legal counsel if you have any questions about contractors that you're working with, if you're blurring the lines.
Yeah, this piece was primarily really geared towards drivers and regular employees from yourself that people are classifying as 1099, um, which really should be W-2 employees.
Yeah.
Not the one-offs that they kind of come here or there, but the regular day, everyday type of people that are showing up doing your job, doing the job for you.
Got it. Got it. Okay. Well, hey, if somebody does have questions that they want to run by you, what's the best way for them to reach out to you?
They can shoot me an email or they can give us a call. Either works for me. Think you all have our emails. If not the ARA, I think they put it out there. Feel
Yeah.
free to reach out.
Yep.
We'd be
Sure.
happy to answer anything that we can. The biggest thing is understanding your risk, your exposure, and then making the proper business decision. One that's more long term than right in front of you.
Yep. All right. Well, Mike, John, great information. Thanks for being with us. Um, Real quickly, before we sign off, just a quick note about NARS. We will not be having a webinar in April because all of the best content will be at NARS live. So we encourage you to join us in Orlando next month if you need information about what is really the premier event in the repossession industry. Go to our event website at reposummit.com, reposummit.com. Um, Mike, anything else before we sign off? Any last words?
No, guys, thanks again. We truly do appreciate working with you guys as partners. And we love anytime we have an opportunity to work with you, your drivers, yourselves. We're always game. So we appreciate the opportunity.
Okay, well, everybody, thank you. Thanks for joining us, and we will see you at NARS. If you're not at NARS, we'll see you in May for the next ARA continuing education webinar. Okay, bye, everybody.